Make sure you confirm that you're viewing the slides. I'm hoping that everything is showing there. Okay, we're going to go over like special enrollment periods. Again, it's going to be a refresher. A little bit of taxes, specifically the 1095A and B, and I'll just mention the C just so you are aware of it. And then just a few marketplace updates. I think you guys raised like all the big issues that are happening, so we were able to cover a lot of those with a lot of follow-up that I need to do from my end. So this is a quick reminder on grace period. Clients I know have come back to you and said, I never got my invoice, I got disenrolled, I need to enroll again, or I don't know what's happening. Now that open enrollment is over, it's a little more concerning because it's over, right? And unless they have a special enrollment period. There are a lot of clients who come back and say, I never got the invoice, or I just got it, and it's past the 10-day grace period. So there has to be some advocacy done on their behalf. Remember, for subsidized QHP, meaning if a client is getting tax credits, they have a 10-day grace period to pay the first month's premium. That means that clients who enrolled before February for March 1st, they have until March 10 to get, January 15, they have until March 10 to have, I am so screwing that up. They have until February 10 to get their payment in. And then for those who are going to start in March, they have until March 10 to get their first premium in. And after that is 90 days every month, right? Only for those people who are getting tax credits. For full QHP, it's a 10-day grace period for the initial premium and 30 days after that. For the essential plan, it's only 10 days for the first month's premium, and know that they will not get like their plan ID until they pay that first premium. And then there are no additional grace periods for them because enrollment is ongoing. For CHIP, this is super important. I've had clients who have been disenrolled because they don't pay that first premium. And even if it's the plan's fault, I think if we can be proactive and save ourselves the hassle of having to re-enroll someone, asking for retroactive coverage, which takes forever, if at all. Here is the language that comes up when you enroll someone who's eligible for CHIP. I don't know how many of you have read it. Hopefully you're better than I am, and you read it carefully since it first appeared. Your child will not be enrolled in Child Health Plus plan until the first month's premium is paid. It goes on to say that they should receive an invoice from the plan, but if they don't, they can make that first payment by sending in a check or money order, and they send that payment to the address provided on this page, which in this case, it was like that address for the plan selected. And you should include in that check the child's name. And there's like specific information there. Make sure that when you're enrolling someone in Child Health Plus that you give that to the parent, highlight it, and say, if I were you, I would send payment in as soon as possible. And if you're going to wait for the bill, you have to make sure that it's done on time. And on time means that the payment has to arrive at the office of the plan before the end of the month. It doesn't mean that they're mailing it like 1 or 2 days before. It has to give the plan sufficient time to get there. SEP refresher. So I'm assuming agencies are probably going to get another batch of this type of flyers regarding the special enrollment periods from the state. If not, they are available on the website. So we all know that the open enrollment was from November 1st to January 31st, and this time there was no extension. So open enrollment ended already, and special enrollment started as of yesterday. And so can I get coverage outside the open enrollment period? It will depend on whether someone has a special enrollment period. So let's say you do have a special enrollment period. There are a few things to keep in mind. Someone has 60 days from the time of the event occurs to enroll or to switch plans. So the keyword there is also to switch plans, right? We always think of like, oh, special enrollment periods gives you the ability to enroll in a plan, but it's possible that if you have an SEP, it may allow you to switch plans, and I'll explain how or why. When does your coverage start, so there are two different types of start dates. There's a special start date, which I call the special plan enrollment, and that is the first of the following month in which you apply. So someone who comes in February to apply and they have a special plan enrollment, their coverage will start March 1st, even if they enrolled after February 15th. What are those? That is, you get married or you lose your minimum essential coverage. I have something to say about that. So it's possible that during open enrollment you had a client that said, I just lost my employer insurance and it's January 16 and I want February coverage. It's possible that you called the marketplace and you said, I want a February 1st start date for my client who lost their employer-sponsored insurance. And it's possible that the representative said, well, you don't need a special enrollment period. Those don't apply because it's open enrollment. And that information was wrong. Your client, even during open enrollment, if they have a loss of minimum essential coverage, are entitled, or get married, are entitled to the first of the following month coverage. For the loss of minimum essential coverage, that is the rule unless the client had a lapse in coverage. Then, if they had a lapse in coverage, it follows the 15th of the month rule. Example, a client loses their employer-sponsored insurance. They came to you February 1st, right? And they had a lapse in coverage in January because they lost their insurance in December. And they are asking you for March 1st coverage. That's not going to happen because they had a 1 month that they went without coverage. So they're not going to get the first of the following month because, again, the whole purpose of giving them that extra benefit is that they have no lapse in coverage. The other big category is for people who are for birth adoption or where a permanent placement, usually foster care placement, occurs. So that also follows the first of the month coverage. And we'll talk about the birth and retroactivity later on. Regular plan enrollment follows the 15th of the month, and really it applies to all the other special enrollment periods. What can you do? Again, you can enroll in a QHP inside or outside the marketplace. Just to clarify, sometimes clients call you and say, well, I don't want to apply through the marketplace. I'm just going to call a plan directly. And they're not eligible, obviously, for EP or Medicaid. Your advice is, well, you don't have a special enrollment period. It's very likely, not to say it for certain, because it will probably be for certain, that the plan is not going to enroll them because you still need a special enrollment period even if you're going directly with a carrier. The rule regarding the special enrollment period applies to everyone, regardless whether you're buying a plan inside the marketplace or outside the marketplace. And that is meant to discourage people to wait until they're sick to get coverage, right? If you are going to get a special enrollment period and you may be eligible for tax credits, those clients want to apply through the marketplace. They cannot get the tax credits outside the marketplace. If someone is already enrolled in a QHP, they can switch plans once they have a special enrollment period. And obviously, as a reminder, Medicaid Essential Plan and CHIP, you can enroll at any time. For Medicaid enrollees, they can switch plans within 90 days of their initial enrollment. For EP and CHIP, they can switch plans at any time, but you always have to be mindful of the 15th of the month rule, or deadline, I should say. So if, let's say, they say, well, I want to switch my EP plan with X plan because they're horrible, and you want to say, well, you know, you want to do it before the 15th of the month so the new plan can start the following month. Otherwise, you may face some issues. So what are the life-change events that trigger a special enrollment period? One of the big ones is marriage, and that allows both people, whether one or both have coverage, to pretty much do anything. Once you get married, let's say the husband has a QHP, wife can join the husband's QHP, wife can enroll in a different QHP, both husband and wife can enroll in a different plan. Again, marriage gives you 60 days to get insurance, and they can decide however they want. They want to be together and so forth. I know that the next question that's probably coming up in some of your mind is like, what if they want different QHPs and they get tax credits? How can they do that? We found it's not possible through the marketplace. They should be able to. We made the argument to the state that they should be able to select different QHPs, like different metal levels. But from a practical perspective, they cannot do it right now. I'll keep you posted, and I'll follow up on that because it's been at least some time that we submitted that complaint to the state. Again, that marriage follows the first of the month rule. There's an example there. Birth, adoption, placement into foster care. If mom has a QHP and child is not eligible for CHIP, mom can add the newborn to the plan. If mom does not have a QHP, both can enroll into a QHP. For birth or adoption and so forth. I don't want to say most, but the majority of your clients will probably have kids that fall below 400% of the federal poverty level, and they're going to be enrolled into CHIP. And the issue has been that it doesn't go back to the date of birth, whereas in a QHP, it would go back to the date of birth. I'll talk a little bit about the status of the CHIP retroactivity later on in the presentation. But that's something to keep in mind, and it's always a worry when a child's income is below 400% of the federal poverty level and they're going to be placed into CHIP, and especially it's a concern if they're born after the 15, because that means that they could potentially go without insurance for at least a month and a half. Again, I'll address that issue a little bit later on. Which is there. Life change events, this is new. So this was signed into law, and pregnant women will now be able to have a special enrollment period. A big shout out to Young Invincibles, who did a lot of work around this issue. The only thing is that it doesn't go into effect until next year, January. But this is coming within a year, so if someone is pregnant, they will be able to enroll in health insurance, and it will start the first of the month in which the person is certified as pregnant, which is pretty good, right? Again, that doesn't go into effect until next year. Just give me 1 second. Becoming a citizen, national, or lawfully present individual. Remember, DACA, those deferred action childhood arrivals do not qualify as lawfully present because Congress said so. So they can only enroll in what is known as state Medicaid if they are Medicaid eligible. That is, their income is below 138% of the federal poverty level. And as already you guys have mentioned, this group is having issues with the new system because it doesn't know where to put them, and it just says that they're not eligible for anything. So hopefully we'll have a solution to that soon. Permanent move, moving to another state or within a state if you move outside your health plan service area. So that's important. So if someone moves here in New York City, it's very unlikely that they'll get a special enrollment period because the plan offerings are probably the same. So here's an example that shows it. Cynthia moves from California to New York. She can enroll through the marketplace within 60 days of her move, even if she did not have coverage before in California. So that's the general move, right? And that's clear. Someone's moving from one state to another state. They have 60 days. That triggers a special enrollment period. Mary moves from Nassau County to Staten Island. She can enroll through the marketplace in Staten Island. And that would be because there are different plan offerings in Staten Island than in Nassau County. Again, if the plan offerings are the same, it won't trigger a special enrollment period. For this life changes event, it follows the 15th of the month rule. I remember that when we first talked about special enrollment periods for people who became citizens, remember they had like their green card and then they applied for citizenship. That itself doesn't give a special enrollment period. It's when you first acquire the immigration status that it gives you a special enrollment period. So for example, if you were a legal permanent resident and you didn't enroll through the open enrollment period, assuming you're not eligible for EP or Medicaid, and then you become a citizen, that doesn't allow you to get a QHP. Loss of minimum essential coverage. I already went over this, so I'm just going to gloss over it. So that does give you a special enrollment period, as I said. Loss of minimum essential coverage also includes loss of Medicaid and Child Health Plus. Now, for people who have COBRA, it is very important that even before they sign up for COBRA, for them to decide what they want to do. So this is the scenario. A client comes to you and says, I just lost my insurance through my job. They're giving me the option to get COBRA. What should I do? Well, you have to look at what would it cost for them to get COBRA, because it's possible that they may get a really good deal. Usually it's really expensive, but it may be that their employer continues to subsidize their insurance until their COBRA is exhausted. And in that case, especially if they have medical needs that they still need to be seen for, it may be best for them to continue with COBRA. Or if they're not going to get any subsidies, again, depending on what the cost may be, the client might opt for COBRA. But what you don't want to happen is for that employer to sign for COBRA and then say, well, I'm still within the 60 days. I don't think I can afford COBRA. I want to get a plan through the marketplace. You don't want that to happen because they're going to be out of the marketplace. They cannot enroll because they've opted for COBRA. Once someone opts for COBRA, they have to exhaust their COBRA benefits before they get a special enrollment period. And in reality, before that happens for most people later on, like when you're doing enrollments in March or April, that means that they are not going to be able to get a marketplace coverage until the next open enrollment period, just because it takes that long for them to exhaust their COBRA. Each case is different. If you ever have a client and this is not clear to you, you want to run the case by me, I'm happy to provide feedback. Other situations that might allow for a special enrollment period, which we all know it's very hard to prove. Even if a client may have evidence, it's still hard to prove. It's like an error by the marketplace, misrepresentation, inaction, and so forth. There are also exceptional circumstances, which again, I'm just going to skim through to make up a little bit of time to read those. I think they're important. Again, they're hard to get. That doesn't mean that you should be discouraged from helping the clients. Misconduct by a navigator. So sometimes I have to say, you know, if at any point there is a genuine error that you do, let me know. I have no problem going to the state and saying, actually, it was our bad. We need your help to solve this case because we made the error. I have no problem with that. And if that's going to help your clients, of course, let's do it. It has to be that it is your error and it's not that you're trying to help the client by taking blame. You should not do that. If it's the client's fault, I mean, I would not necessarily say that you should take the fault to help them out. But I have no problem in backing you up and going to the state and saying, this is how we screwed up. We'll make sure that we address this issue moving forward, but I need help with this case. I've done it in the past, and I'm happy to do it, so not a problem. So coverage date for those other situations will be determined by HHS. Special rules for Indians and Alaskan Natives. So there's like a lot of special rules for that population. And so they can enroll into a QHP at any time. Also, if their income is below 300% of the federal poverty level, they don't have any out-of-pocket expenses. So if someone says, I'm American Indian or Alaskan Native, they may actually be able to buy a bronze plan and have zero out-of-pocket payments. So that's a really good deal. I have a memo regarding that in case you're ever interested in terms of what are the rules regarding this population. So that was it in terms of special enrollment period. I think we always hesitate when we're thinking over some of the rules because, you know, you call the marketplace and you're told something, and that creates questions in your mind, and you might question yourself. Not a problem if you want to loop back and say, can you just make sure that this is the rule, and I'm happy to respond or look it up as well. So this is going to be also a quick overview just in case you are getting questions regarding 1095A and Bs. The 1095C is for large employers, and I'll go over it really quickly. So this is kind of like the cheat sheet of who's issuing them. Really, clients need the 1095A. I want to remind you that as a navigator, you cannot transmit. That is fax, email, and I would say even download a 1095 for a client. A client can come in and they can get a copy. Technically, based on the rules, you know, you would bring up the application, their application, and say, here's a 1095, click and click print. I think you can click print for them, and then they can go get that copy. And those are IRS rules, and it's because it has like the client's probably Social Security information and all that information that is very private and, again, subject to IRS rules. So it's beyond the marketplace rules. So that is going to be, the 1095A is going to be issued by New York State of Health. The 1095B is going to be issued by either the Department of Health, not to be confused by the New York State of Health, the marketplace, or by a small group plan, health plan. So this is how it looks for clients. So this is obviously completed when the client receives it. Part A has general information about the client. Part two, it says who was covered. And if it was a couple or children, it will say there. And Part 3 goes over the monthly premium for the plan that the client or clients had, the cost for the second lowest silver level plan, and the advanced premium tax credit that was given out on column C. I have to say that I've been doing assistance on the health tax line that we have here on Fridays, and I get a lot of questions regarding the second lowest cost silver plan column because clients are like, what is that figure? I never got that amount. I never paid that. My insurance was much more than that. And I have to explain, like, that's actually used to determine what credits you're eligible for. It's this complicated formula. I don't really get into, like, well, the affordability is based on your income and you're supposed to pay a percentage of it and so forth. I just say that that's for the IRS to determine they got the right tax credits and they should not be worried about that column. So this is just an overview. 1095B, people are going to get it. So for sure you need the 1095A to do your taxes. And we've had clients who call and say, well, I already did my taxes and I just got this form. Well, they're going to have to do an amended return. You're not about to provide that tax advice in terms of how they go in doing an amended return. If they did it with someone, they should obviously go to that person so they can do that. If they use software, I believe nowadays the software probably has instructions on how to do the amended return. Again, you're not about to counsel anyone on how to do an amended return. And if they ever have questions on what to do because they already filed their taxes, they can always refer to the IRS and give them a call and explain the situation, and the IRS should be able to tell them. The B, you don't necessarily need to have the B in your hands to do your taxes. That's not necessarily what you're going to tell clients. You're going to say you need your tax forms to do your taxes. But the B basically is proof that someone had health insurance. And it's not a big issue if someone had insurance for sure for the 12 months. It may be an issue if someone had a 1095A for a few months and then they need to show that they had insurance for the rest of the year. I did a run through to my taxes for this year to see what were the questions. I used like TurboTax, and really for someone who has a 1095A, it will ask what type of insurance did you have through the marketplace, and then it will list the different like tax credit, the 1095A, and Medicaid, and so forth, or small business marketplace. If you didn't have any of those, it will ask, did you have health insurance? And if you attest that yes, you did, you should be fine. You don't do anything with the 1095B. You don't upload it, you don't provide it, but you hold on to it in case the IRS later on has other information, and you want to be able to say, here you go, this is my proof that I had it, okay? That's how the 1095B looks. And again, the people who had Medicaid, Child Health Plus, or coverage through a small employer, that means less than 50 employees, will be getting a 1095B, and there's other like lists of people who would be getting it. But from your perspective, your chances are clients who got Medicaid CHIP. Again, it's not odd if a client gets both an A and a B depending on their type of coverage for 2015. The C is issued by large employers, and if you notice, it's very similar to the B, where it checks off here. If you had 12-month coverage, there's just a check mark there. If you only had it for some months, there's a check mark there, okay? Frequently asked questions that we get, like I said, I already filed my taxes, what do I do? Chances are they're going to have to do an amended return. I had Medicaid or CHIP in 2015. What documents do I need? They're going to need the 1095B to show that they had coverage. It's possible that their tax preparer or accountant might say, well, until you have that form, I'm not going to do your taxes. So the number to call to get a replacement, at least for the 1095A and B, if they had Medicaid and CHIP, is the 855-766-7860 number. So you have this presentation in case you want to give that number to your clients if they want to really do their taxes and they're still waiting for the 1095B or the A. I don't have legal status in the U.S. and was charged a penalty. Am I subject to the penalty? We went over this issue last year because we heard from some of you that undocumented immigrants were being charged a penalty by their tax preparer. So the answer is that if they were undocumented for any of those months, if they didn't have lawful status, they should not be charged a penalty. And they have to complete Form 8965 and put code C to be exempt. A tax preparer should know this by now. However, if the tax filer has family members who were subject to the mandate because they do have a legal status, then they may still have a penalty to pay. Here's a big red flag. So there's a few articles. The IRS is obviously being proactive here to let people know that there are clients who are being, in essence, ripped off, meaning tax preparers tell them, like, well, you're subject to the mandate, you have a penalty, but if you give me cash right now, I can make it reduced to X amount. That is obviously wrong and appalling in my perspective, and obviously those tax preparers are going after individuals whose English might be a second language or who have limited literacy or who simply don't know, and they're being, again, ripped off. So I'm going to see if we can do a one-pager, kind of like doing general information warning type of thing that you guys can distribute. If you have clients who had emergency Medicaid, that's a red flag for you to be able to educate them about the tax penalty. And I think moving forward, again, if you are working with that population, you want to kind of, as in general, like, you know, next year when you file your taxes, be aware of X, Y, and Z. Continuing with the FAQ, not paying my premiums last year, but did not cancel my plan onto the marketplace, and now I'm being asked to return APTCs that the plan got after I stopped paying. Am I liable for those? So we were not aware last year that you needed to actively cancel through the marketplace the coverage. Otherwise, the plan still gets at least one more month of premium tax credits paid on your behalf, and that client will be liable for that 1 month. And the reason is that the plan has to give people who have APTCs a 3-month grace period, right? So they have to keep them enrolled, and basically for those 3 months, they hold out, waiting for the client to pay the premium, probably retroactively if they've missed more than 1 month. In the meantime, the IRS has sent, the plan has received 1 month of APTCs while the client enters into this 3-month grace period. The plan is allowed to keep that APTC for that 1 month after the client stops paying, right? And the client will be liable for that month's premium. The client should not be liable for 3 months. Example, I have insurance through the marketplace. I decide that it's too expensive and I don't want to pay my QHP. It's February. I don't cancel it. And that means that I say, well, I'm just going to stop paying and eventually the plan will go away, right? So it's February. I already paid for February, but March, the plan receives my APTCs for March, and the plan is going to give me March, April, and May to become current. Because I have APTCs, I get a 3-month grace period. Let's say I never pay, but the plan already got March advanced premium tax credits. So when I am doing my taxes, I'm going to have to pay the APTCs that were paid to the plan for March. They should not be charged for any more APTCs after that first month. I hope that makes sense. What if my 1095 is wrong or I have not received it? By now, I believe the 1095 should be in people's hands, mailed out. Hopefully, everyone got it. But if not, consumers can call that 855 number that I mentioned. For someone who didn't have insurance in 2015, they wouldn't have to qualify for an exemption if they're subject to the mandate. Some exemptions can be applied directly when they file their taxes through the Form 8965. I hope that you remember, those of you who have been with us for more than 1 year. We went over this chart last year, and basically there's some specific situations that allow someone to claim the exception on their tax return. Like, for example, your income was below the tax filing threshold. Well, then you're not going to be subject to the penalty, and you can claim it on your tax return. This is the 8965. Again, this is an example from 2014. I can provide, it should be the same. The tax preparer should know about this form. You are not about to help a client file their taxes or fill out any of these forms. That is prohibited. Exemptions which have to be claimed through the marketplace, and this is not the New York State marketplace, it's healthcare.gov. It's like the general hardship and other, like if you're looking for an exemption because of your religion, which is very hard to get. So you can see those lists. Again, you're going to get this PowerPoint presentation. So how do I apply for the hardship exemption, which is usually what clients who really don't have any other exemption want to try to go for? They have to complete the application regarding exemptions, and they have to provide supporting documentation, and they have to pretty much follow the process established. What qualifies as hardship? So it's not just like I had a difficult time getting insurance, right? Or my expenses exceed what I can pay for insurance, X, Y, and Z. There's a list. You were homeless, you received a shutdown notice from a utility company. I mean, these are really like devastating situations. There is, however, this catch-all that it's not listed. Like there's something that happened in your life that it's not listed from 1 to 13, and you can still apply for that. And here are kind of like useful tools. Literally, if you go to healthcare.gov and type in the search function exemptions, there will be this website where you can walk through and answer questions, and it will determine what exemptions you or the client might be eligible for. And in your case, it will be the client, right? And then it will give you the resources you need on how to apply for it. Now, the individual mandate, what's the penalty, right? So I left here the 2015 penalty in case you get questions right now because clients are going through it. And it's the greater of the 2% of the income minus the tax filing threshold, or a flat amount of $325 per person. So someone, let's say, makes $40,000. It's not that you're multiplying 40,000 times 2%, right? It's 40,000 minus the tax filing threshold, which for an individual is usually around 10,000. So really that person is multiplying 2% times 30,000. If you want more specifics on how it's calculated, I'm happy to provide that information. I'll see if I can pull up something useful to send through the weekly alert. But it is the higher of the two. For the following year, it's going to be 2.5%, or the flat of $695 per person. For children, is $347. So it's usually half of what the adult rate is. There are some caps for people who have to repay this year or who may potentially have to repay the following year, and it's based on income. Now, the big takeaway is, let's say you got tax credits, right, and you still fell below 200% of the federal poverty level. For 2016, it's going to be a little bit different for New Yorkers because the essential plan is in, and that covers people up to 200% of the federal poverty level. But for other people, those caps apply. Now, for someone who ends up making above 400%, remind your clients they have to pay the entire amount that they got, because that means that they were not eligible for it. So clients might say, but that's unfair. You asked me to project my income. That is the nature of how tax credits work. So if a client doesn't want to have to repay them all and they know that for sure they're going to be above 400%, let's say in June, they should go back into their application and stop getting tax credits to mitigate the damage of having to repay them all. If they're happy to pay them at the end of the year, then they just continue getting the tax credits and then they reconcile. Marketplace updates, as I mentioned, refugees are being placed in EP3, I meant 3, not E, 3 or 4, which should not be the case. They should be getting Medicaid because they should be getting federal Medicaid. They're not subject to like the 5-year bar or other special category that would move them into EP. Again, this is only for those who are below 138% of the federal poverty level, which from talking to those of you who do refugee work, that's most of your clients, if not all, because they don't have income, right? To fix them, you have to use the case reporting form. So send them as soon as possible. Manual ID proofing. If you are starting an application, or actually if you have to ID proof someone, you have to start an application for them before you can submit the documentation for a manual ID proofing. And usually this is the case if you have someone who doesn't have status, like they may be applying for emergency Medicaid, or someone who just doesn't have a history at all, like a visa holder. You have to start the application before you fax over the documentation. Affordability test. This is always a heartbreaking situation when an employer offers insurance and then that prevents that employee and even their family, like a spouse, to get tax credits through the marketplace. And it's sad because they could potentially get a better deal through the marketplace, but for the employer offering insurance that is quote-unquote deemed affordable. So when we started open enrollment, the affordability test was based on 9.5% of the household income. It went up last year, then it took us a while to catch on that it had slightly gone up. So now for the record, for this year it's 9.66%. So that means that if the cost for the employee's coverage only is more than 9.66% of their household income, not just the employee's income, the total household income, then it is not affordable and they can get tax credit. Or the reverse, if it's affordable, they cannot get tax credits. Now, if the client says, like, my insurance through my employer is horrible, I don't care if I have to pay full premium, I want to go through the marketplace, at this point, they would need to have a special enrollment period, right, to get coverage for a QHP. But let's say they do, then they can pay full premium. Here's an example, and I realize that with my example, it doesn't display all the issues associated with this rule, but hopefully I can touch on them. Sam and Rita are married. Their household income is $50,000. Based on their household income, they are expected to contribute $4,830 toward the cost of insurance. That is, I multiplied 50,000 times 9.66%, and they gave me 4,830. Hypo 1, Sam's employer offers family coverage. The keyword is family coverage, right? Sam must pay $3,000 annually in premiums for self-coverage only. So Sam, for his coverage only, the cost that he has to pay through the employer is $3,000. Because the coverage is affordable, meaning that it's less than the $4,830, they cannot get tax credits. Now, let's say to get a family coverage, the cost is $6,000, right? So at that point, you may be saying, well, now $6,000 is more than $4,830, which is the amount that they're supposed to pay towards the cost of insurance. Unfortunately, the rule doesn't allow the inclusion of the cost of family coverage. It only looks at the employee's coverage cost. So in that scenario, the family, both Sam and his spouse and Rita are preventing from getting tax credits through the marketplace because quote unquote is deemed affordable. Hypo 2, Sam's employer offers individual coverage only. Assume the same scenario where Sam has to pay $3,000 in premiums. So Sam can get tax credits, but Rita can because the employer only offers individual coverage and not family coverage or spouse coverage for that purpose. But here's the catch, and the sad thing is that assume Rita goes to the marketplace. A household of two with $15,000 and only needing coverage for one person will likely result in 0 APTCs. Why is that? Well, the marketplace is also looking at the coverage for Rita only, so it's not including the cost that Sam would have to pay outside the marketplace. In other words, it's not a good scenario. I know you guys get really compelling stories, and I wish I could say, like, this is a workaround. I can't. I don't have a workaround. I'm sorry. Cheap waiting period. So sometimes you might have children who are enrolled through an employer, and assuming the parent can disenroll them from the employer, that child may be subject to what is called a waiting period of 90 days. It used to be 6 months in the old days. So 90 days seems a lot, but it's actually pretty good. So if the client is willing to wait 90 days before enrolling the kid in CHIP, great. If not, there may be no waiting period if one of the exceptions applies. And there are a lot of exceptions, so you want to go through it. Let me give you a scenario. Client comes and they say, you know, I have my child covered through my employer, but that means that I have to pay family coverage, which is a lot of money. I only want to pay coverage for myself, and I want to put my kid into Child Health Plus. Can I put my kid into Child Health Plus? You do the application, let's say, for the child, and then it's going to ask, does the child have insurance, or can the child have insurance through the parent, right? And you're going to answer yes. Well, those questions are meant to determine whether the child is subject to the 90-day waiting period because the child had or has coverage through the parent's employer. And so what you're going to look at is this list to say, well, hey, the child is under age 5, that's an exception, so you would go ahead and complete the Child Health Plus application, and they should not be subject to the 90-day waiting period. There are other issues that the parent might face, like they may not be able to disenroll the child until their employer open enrollment period starts, because the employer will say, well, you're locked in, and unless you show me that the child has coverage, I cannot disenroll that child from the plan. And CHIP is going to say, well, I'm showing up that there's coverage, so I cannot offer you coverage. It can get complicated, to say the least. And I didn't check whether you were able to see my screen, so I'm hoping you can, or you were able to. Any questions? Okay, so we do have some questions. Give me 1 second. I just want to get to the questions that have not been answered. I noticed on slide 7, tax penalty was listed under regular SEP categories. Is that still SEP for 2016? I thought that was just last year. You are correct. It's probably just, let me go back to slide 7. Give me 1 second. No, it's not this year, so I'll correct that. Okay. If a couple is on a QHP and one of them becomes eligible for Medicare during the year, does that allow the other spouse a special enrollment period since it will change the APTC remaining? I have a client whose spouse would like to switch to a lower level of coverage when that occurs. So Emily and I are thinking about this. So the question is, you have one spouse who's becoming Medicare eligible, and technically what's supposed to happen is that the other spouse stays in the same plan and simply takes an individual. I don't think they would be entitled to go into a lower middle level. But because in essence the marketplace gets a little confused on those cases, and the client may have to re-enroll just because she also gets disenrolled, it's possible that it goes through. But let me find out if, as a general rule, that would lead to an SEP. I doubt. I don't think it will lead to an SEP. But let me find out. I really don't think so, but let me find out. That's a great question. For plans in which employers subsidize COBRA for a certain number of months will the client be able to use an SEP when the subsidies end? No. So they have to exhaust their COBRA eligibility. So we've had that situation where a client says, well, I want to keep it because for the next 3 months my employer is going to subsidize it. That is unfortunately not exhaustion of COBRA benefits, which is horrible because you want the client to maximize their benefits. What is the rule for consumers who update their income in the system and the amount of APTC they qualify changes after the update? Do they have to retroactively pay back APTCs if they qualify for less APTCs after the income update? Yes. So the general rule is that your tax credits are based on your annual household income, and it doesn't matter when you report the change. So, for example, it is March, and I'm working at CSS, and I know my income, and I project that as my total income. I don't know, like I change jobs, and I find like a salary increase that completely or partially moves me out of APTCs. At the end of the year, whether I owe tax credits, it's going to base on the total income, not my initial projection. So that's why on the worksheet that has the caps, when someone is above 400% of their federal poverty level, and it can be that they find out like later on mid-year, they're going to have to repay them all back. If they under-projected their income and they never went back in and made the change, they're still going to have to pay back, right? I have a graduate student from another country who is working for the university. She has all the legal working papers and qualifies for income, meaning qualifies to work. However, she wants to become a citizen, and at that time she has to prove she has not been on a public charge. Is this a law that will change with the ACA? That's an immigration question. So I would have her defer to an immigration. So we know that for Medicaid and immigration, if you're adjusting your status, it's not going to be deemed a public charge. I don't know for other types of subsidies. I don't think that will be the case. Let me find something so you can share, okay? So this is people who are getting assistance for insurance, and the question is, would that affect when they are adjusting their status? Again, I know that for Medicaid, it will not be an issue. I don't foresee tax credits being an issue either. But there is still this general concern that it might, for whatever reason, and again, I just usually say you should talk to your immigration attorney to get their perspective on what it would be like. How should we factor the cost of the child's portion of the plan through the employer to see if it's above 5? You don't consider any cost of anyone other than the employee's cost. So I hope I'm answering that question. So how should we factor the cost of the child's portion of the plan through the employer to see if it's above 5%? Oh, I think you're referring to the 90 days CHIP grace period. Right. So what you need to do, which is always tedious and hard to get, is the person has to go to their HR and say, I need a breakdown of what it would cost for my child only. Like they have this formula of like employee only, employee plus dependent, and family. HR should be able to figure out that amount, if that makes sense. Let me know if it does not, and I can provide you more guidance. I've done it in the past, but it takes a lot of back and forth because HR has to really break it down of what it would cost just to insure the child. There are many clients who come in that do not have a Social Security number but are legally residing here. This includes international students and applicants who are in the process of adjusting their status. These applicants should be eligible for financial assistance or Medicaid. I will say the general answer is yes, if the marketplace is giving you that eligibility. Now, whether they have a Social Security or not, it's not going to be determinative, meaning you can still get Medicaid or tax credits. For tax credits, the rule is if you're lawfully residing, so they would. Some people have reported that they have, if they say, I'm eligible for a Social Security number, it keeps asking them every so often. For people who know that they're not going to get it anytime soon for whatever reason, they should be able to say that they're not, and then it will go away. Otherwise, you have to keep updating the application to make sure that the document request doesn't result in a lapse of coverage, or disenrollment, I should say. What happens when clients are enrolled in health insurance for 9 or 10 months in the year? Are they subjected to an amended version of the penalty? Thank you so much for the question. So I always take for granted when people are like new and I go through a presentation. The penalty is assessed on a monthly basis. So people get the penalty on the month, for each month that they go without coverage. And I should also say that there is this grace period of 2 months. The rule says that if you're without coverage for fewer than 3 months, that you're not subject to the penalty for those months. But less than 3 months really means 2 months in most cases. Now, if you had coverage for 1 day in a month, that shows up as having coverage for the entire month. You might see this in like employer-sponsored insurance, where someone might have coverage up until the 2nd of the month. Well, for purposes of the penalty, that person is deemed to have coverage the entire month. And if at any point someone has a 2-month short coverage gap, then they're fine. They're not going to be subject to the penalty. If they have other coverage gaps, they're going to be subject to the other coverage gaps. You can only have 2 months that you're without coverage and not be subject to the penalty for those 2 months. So as a follow-up with the immigration question and whether it would affect if she's adjusting, the follow-up is that the client would not take Medicaid because her lawyer told her not to. So as I said, there is this general distrust about taking Medicaid and affecting your your future eligibility to adjust your status. I'll send something on that, the public charge. I feel like I've already addressed this last year, and I should have something on record, but if not, I'll pull something out that you can provide to the client for them to provide to the attorney. Again, you know, we never want that client to come back and say, you told me this. I don't like to mess with anything immigration related because it can have extremely serious consequences. And Grace is saying that you cannot hear anything. I'm sorry. Grace, you need to, well, if you cannot hear anything, you cannot hear me. Okay, I'll reply to her. Any other questions? That's all the questions that came through. Any final thoughts? Oh gosh. So I made the mistake of not like deleting your, if I click here, it goes away? Yes. Okay, so I made the mistake that when I was doing case rounds, I didn't remove your virtual hand, and so I have people that have their hand. Raise your hand again if you want to ask questions or contribute anything. You guys are all hungry and you want to go like have lunch, or maybe you're like being harassed by your clients and you want to get to them. Okay, I have Jane. Jane?
Oh no, I think it was just up. I'm good. Thank you.
Okay, thank you. Okay. Anyone else? Going once? Going twice? Okay. I am going to assume that we are done. As always, thank you so much for everything that you do, and open enrollment is done. There was no extension, although, again, I had someone come in and tell me that it's possible potentially to run through an application, even if you don't select any SEP, and still get through. If you ever say that I said that despite being recorded, I will deny it. Thanks so much for everything that you do, and I know that as someone who has used health insurance this 2015, this past year, it can make a world of difference, and you do amazing work out there. So thank you so much. And Emily's here with me, so we're looking at each other and we're working through those cases. We promise we'll be following up. And Emily says that if you solve your cases or there's something big that change, send her a quick email and make sure you're using the updated case reporting form. Okay? Thank you so much, everyone. Have a good week and enjoy the weather if it's nice in your area. It's really nice down here, so I hope you're getting some sunshine. Thanks so much. Take care.